Good morning and welcome to the Moneycontrol Livestream. You are watching Markets with Santo and CJ. It's a beautiful midsummer morning here in Bombay, but the markets is all about the ugliness, right, Santo? At this point of time, although the Nifty futures on the Singapore exchange are indicating a mildly positive start for us, do not be fooled by it. For the past two sessions, we have seen similar positive starts, but we have ended up giving all of those gains to end the session in the red. If you look at what the cues that are emerging from Wall Street, they are not really very good. Wall Street technology stocks led the slide in US indices overnight, largely because of the profit warning that Snapchat operator Snap had come out with day before yesterday. Apart from that, yeah, I mean, if you look at some of the other cues, Asian markets are largely mixed. While the US dollar index thankfully has now hit a 1-month low, so there is some positivity coming out of there for emerging markets like us.
Well, CJ thinks, there's some signs of improvement on the margins, but I don't think it changes the overall picture at all. Now, strong dollar index was one of the biggest worries for bulls, but even as it is coming up, I don't think there's a big improvement in sentiment. It's been broken pretty badly. And now you're seeing heavy selling in many of the mid-cap stories. Now, one by one, they are just coming off, and you don't know where the next hit is going to come from. And what happens in this kind of a market is that, when you lose money heavily in one particular segment, then you'll have to try to make it up in somewhere else. You already saw that in steel. Yeah. Huge losses suffered there, and now yesterday was the turn of sugar. So, there is a lot of uncertainty in the market at this point, and which is making, holding back investors from, going and buying at lower levels.
It is a very grueling tug of war, if I may call it, in that sense, between the bulls and the bears at this point of time. Although all the macro indicators are in support of the bears, but bulls are also holding fort, Santo.
They won't be able to hold fort for long.
The sort of buying that is coming out from domestic investors. But the question then arises that for how long can domestic investors hold fort, and are they running out of steam? If you look at the recent DII data, it seems that there is some bit of slowdown happening in terms of the buying power from domestic investors. And therefore, if the domestic investors probably get a little, uncertain, would that result in a bigger, worry for the overall market sentiment? So that is something to keep an eye on. That said, let's quickly dive into some of the stock action that we'll be looking out for, starting off with a sugar name, Santo.
Balrampur, Chini, the stock took a beating yesterday following reports that the government is planning to curb exports of sugar. Now, CJ, I think it would be more of technical factors at play in the short term, where you could, sugar has been a great story for the last couple of months or so. You saw heavy buying there, good buying especially from HNIs, but now I think slowly the tide is turning. Irrespective of the fundamentals, the fact that it's overowned and that the market sentiment as a whole has changed could see a lot of profit booking in stocks. It's also there in the F&O segment. And yesterday, interestingly, despite this fall, you saw the open interest coming down, which probably indicates that short covering, which again indicates that a lot of people probably already knew that something like this was coming and had built in short positions. If you see, the stock has fallen very sharply from its April highs.
The stock was down about 6% in the session, and there was definitely not only some bit of long unwinding as well involved, because a lot of people got scared that export limits could probably undo the story that has been building up in the sugar space. But Santo, I'll be careful about using past tense when it comes to the sugar story. I think it is the story is very much alive, and the story was never really about the export side of the business, right? It was always about what is happening with the ethanol side of the business, and I think there the story remains very true for Balrampur Chini. If you look at the company in particular, the distillery side of the business has been gaining share in the overall sales of the company. Analysts are expecting the distillery volumes to almost double in the next 3 years, and that could trigger earnings growth of upwards of 26% on an annualized basis for Balrampur Chini. The stock, remember, the stock has already more than doubled in the past 5 years, and given that it is one of those sectors which has been perennially undervalued because of the cyclical nature of the business, and of course there has always been fear of policy intervention when you talk about sugar. This is one side of the business which has become much more uniform in that sense. There is lesser fear of any sort of policy intervention. Plus, the government itself wants ethanol blending to improve. They want the blending share of ethanol in fuel to rise to almost 20% in the coming years. So overall, longer-term triggers remain very, very much positive for the stock. And I feel the panic selling that we have seen yesterday and the long unwinding that we are seeing on the counter could actually be a good opportunity for longer-term investors to get into this space.
Well, the longer-term story might be good, but remember also so far the earnings story has been pretty muted. Last 3 years, bottom line has not really grown. You had FIs trimming exposure to the stock during the March quarter by about a couple of percentage points, though domestic institutions did load up.
Retail, I think retail and domestic investors have definitely, and even some very well-known HNI such as Mr. Goel, who is always known for his sugar bets, they have also been building positions in the sugar space, not only in particular Balrampur Chini, but that goes to show that the overall sentiment towards the sugar space has changed a lot compared to yesteryears when this used to be a very tactical sort of a trade. The sugars, you will buy sugar stocks for 2 months, then once the story is over, you sell them out, and the sugar space will be probably dead for another year, and then again we will see a revival.
But for the short term, the story ain't sweet, CJ. Just bear that in mind.
One stock where story is looking sweet, contrary to expectations, is Venus Pipes. Yesterday, the company made a debut on the stock exchanges, and very strong debut compared to the sort of sentiment that we have in the market right now. The stock listed with a premium of more than 8.5% Santo, and I think if you generally would expect that when there are listing gains, some of the HNI and FI investors, short-term investors would utilize that opportunity to book profits, but surprisingly, there were no major bulk deals happening on Venus Pipes yesterday, neither on the BSE nor on the NSE, which suggests to me that investors want to hold the stock for a bit longer and from a longer term point of view. Also remember, Venus Pipes is a proxy to the growth expectations in the chemical and in the engineering space. So if you are expecting, or if you're positive on the private sector capex revival and you're positive on the chemical sector in India, then Venus Pipes becomes an obvious play because it's a key supplier to both of these sectors. So in that sense, overall things are looking quite good, and I would expect the healthy performance of the stock on its debut yesterday to continue going forth.
Okay, I look at it from a slightly different way, CJ.
You always do.
I wouldn't read too much into the fundamental story right now. Here's what I think is driving up the price. Look at the equity base, just about 9 crore and 90 lakh shares in all, 75% of which is with the promoters. So how much shares do you have left really? Hardly anything, just a couple of lakh shares.
It's just listed, so, Santo, give them time to increase the
which is what? It's a
flow.
small cap, there's just no floating stock, and that's why you're seeing the prices go up. If you look at purely valuations, again, the stock is not cheap, right? But
it's not too expensive either.
But that said, because there is no floating stock, CJ, I think the stock price can go anywhere. I mean, I won't, argue with you on that one.
In the near term, at least, it's going to go up.
Yeah, if price is the only factor, then yes, the stock can rise, but I'm not so convinced otherwise.
But the fundamentals also remain quite a good story at this point of time. So there is price as well as story, and that is always a good combination in this market, right, Santo?
Okay, we'll see about that. Grasim Industries now. Fourth quarter numbers were below market expectations. The company is facing pressure in its core VSF, viscose staple fiber business. But there's an additional trigger for the company. It is now foraying into the paint business. It's investing about 10,000 crores there. Now the good part is that according to Jefferies, much of the investments in its core business, VSF and chemicals, that's been almost over. So balance sheet is in a good position right now. So this could be a a key trigger for the stock. Now it has fallen quite a bit, from about the highs you saw in Jan. It's come off very sharply. This is not a stock that could rally quite dramatically in the short term, given that there is clearly input pressures in both the VSF and the chemicals business, but this is a stock one can look at in the medium term, especially in this kind of a market.
Santo, the doubling of the capex on the paint side is definitely a statement of intent from the company, but I think even if they have probably tripled the capex, I don't think it would have done anything for their ambitions in the paint side of the business, because this is going to be a very, very, very difficult venture. If they're trying to compete with a market leader like Asian Paints, I think they would need to invest much more to even have a chance of dislodging Asian Paints from its perch. The reason being very simple, that paints business is not a very commodified business, right? This is a business which has a lot more to do with branding, customer loyalty, customer satisfaction, and of course distribution capacity. On both those counts, when it comes to branding as well as distribution network, Asian Paints is miles ahead of its competition, and while Grasim has a decent distribution network, it will probably find it very difficult to compete with the distribution that Asian Paints has. Apart from that, given that a new player is coming in, you will generally believe that, okay, I can undercut the incumbent or the existing players and gain market share. But let's not forget that Asian Paints margins are the best in the industry. Therefore, it has the ability to undercut the new rivals who are trying to come into the sector and sell products cheaper to maintain its market share, if not gain more market share from the existing players. So for me, while Grasim's intent is very aggressive, I think for the sector as such, it could end up being a non-event, wherein these companies might come in and might get a little bit of market share, but they will never be able to compete at the same footing as Asian Paints.
But it is not, paints is not really the entire story out here. See, there is also the capacity addition that has happened on the VSF and the chemical side. Besides, it's holding in Ultratech cements, So it's not just paint is one of the story, and it's very hard to think that, in the first year itself they'll come and they'll grab market share. Paint is a multi-year story according to me, but this gives it one more engine, So it's a well diversified play in that sense, and the fact that stock has corrected sharply, this is something maybe one could consider looking at.
Well, this is no Geo Santo, that is all I know. One stock, of course, that you talk about valuation and value zone. But before we get to it, I think the market is about to open with just 3 seconds to go. So let's take a look on how the opening is.
Nifty is up 71 points.
Yes. But whether the key question is whether this positivity will sustain or not throughout the session, that is the key thing to look out for.
Nifty Bank is up about 0.6%, up about 214 points. Sensex is up 210 points. But yeah, CJ, as we were talking, yesterday also the same thing. You see the market opening on a firm note and then unable to struggle, unable to sustain at higher levels. And there is a crisis of confidence clearly in the market at this point in time. Most people we speak to say that, they wouldn't really be chasing prices. They would nibble at good opportunities whenever there are, shares going at good valuations, but otherwise no one is in a hurry to buy. It more seems like clearly a sell on rise market.
Well, Santo, but if you look at the second line stocks, they're actually doing pretty well after taking a knock yesterday. The Nifty Small Cap 100 Index is up about 0.4%. The Mid Cap 100 Index is also up about 0.4% in trade. So it seems like they are sort of leading the revival or rebound, if you may call it that way, in the market. But the key question is whether this will sustain beyond 2 o'clock. When the FIS come, with their big truckloads of shares and dump it on the market. So that will be key to watch. We hope that it remains this way.
Well,
coming back to stocks, Nykaa is on my watch list. I believe that the stock has entered value zone, Santo, because it has now corrected 45% from its recent highs. If you look at the growth story for Nykaa, that very much remains intact, although the Q3 performance was not much to write home about. If you look at it from a longer term perspective, analysts are still expecting almost 30% annualized growth in top line for the company. And also remember, this is one of the only few profitable startups out there which reflected in their profits rising substantially from FY20 to FY21. Overall, the risk reward now has become very, very much attractive, because given the 45% fall from highs, I believe the downside here would be very much limited. So those who are betting on a higher return, maybe in 3 to 5 years point of view, could be looking at this stock as a candidate for accumulation going ahead.
Well, that's what they said about Paytm also when it had fallen about.
I'm pretty sure Paytm is also in the same bracket. Paytm, Zomato, and Nykaa, I think they are all entered into value zone, wherein people or investors with a thinking mind or a thinking cap will actually start looking at it and not go by the narrative that has surrounded these stocks for the past 7 to 8 months.
Well, the price has come up from its peak, no doubt. It's down about 45% odd. But Nykaa is also right now probably getting typecast along with the rest of the new age business. Now, what was in favor of Nykaa so far was that it was the only profitable name among that. But market obviously overlooked the fact that it was paying sky high valuations. My whole issue is with the kind of valuations that you pay. Still it's very expensive, but expense apart, competition for Nykaa is going to be very tough as it enters the main line, and tries to chase the mass market. That's where it will run into stiff competition, and that will also be, put pressure on margins, which means that earnings growth will again reduce, which makes the stock even more expensive. So this is, if at all you're saying it's a good company to invest in, it's really a multi-year story, CJ.
It is. And Santo, when you talk about valuation, if the market is willing to pay 100 times forward earnings for a stock like DMart for top line growth of 15 to 20% on a year-on-year basis, I don't think it is too expensive to pay 80 times 1 year forward earnings for a company like Nykaa, which is going to grow top line.
It's far more than that.
It is 80. When forward earnings, if you look at it on 1 year forward basis, close to 70 to 80 times. And for 30% growth, I think that is a relatively good trade to take in. When you talk about competition, I think yes, competition is going to be there. But here you have to look at the management, right? It's not always about the numbers. Sometimes the qualitative aspects are also something that investors have to take into account. And clearly, Nykaa's management has demonstrated the ability to not only grow fast, but also grow fast while also keeping profitability in mind. So that would be my bet if you're talking from a multi-year perspective.
NTPC, the last stock on our watch list for the day. Again, the stock has seen some bit of correction over the last couple of weeks, but still it's a good bet on the renewable sector. And according to broking house CLSA, there is better visibility on capex addition. NTPC is also likely to set up joint ventures with states and PSUs. So those are the big triggers. Besides that, valuations are pretty attractive. It has a dividend yield of close to about 4.7% and about 8 times forward earnings. There's very little room on the downside.
And Santo, no doubt the renewable energy story has been one of the key triggers for NTPC's rise over the past 1.5 years. But at this point of time, I think the short-term worries are more prominent than the longer-term prospects. If you look at what is happening in the power sector at this point of time, the revival or the the re-emergence of state discoms not being able to pay power generators like NTPC will again become an albatross across NTPC's neck, because the surcharge income, if you look at the surcharge income for late payments that NTPC made in Q4, that show a very sharp drop. That means discoms are not really paying at this point of time. Therefore, that could become a key overhang on the stock. Apart from that, if you talk about commercialization of their capex, I think that could also come under doubt if the current situation around coal supplies or the coal shortages that the country is facing, if that continues, those plants will probably face delays in terms of commercialization and coming online. So the capex part of the story is also under threat at this point of time.
Well, with that.
That said, one thing that is not under threat is our coverage of World Economic Forum. Yesterday, Moneycontrol was reporting live from the ground at Davos, the spring edition of the World Economic Forum. And here's slight highlights of some highlights of the session yesterday, with a lot of key dignitaries and key corporate honchos speaking to Moneycontrol live. So have a look.
Well, with that, it's a wrap on this edition of Markets with Santo and CJ. I hope you enjoyed watching it, and do share your comments in the comment section below.
And do follow us on the social media links at the bottom of your screen. And for all of your financial news, do stay tuned to moneycontrol.com and the Moneycontrol app. We will catch you live again at 3 p.m. with all the day's action. Thank you.
Thank you for watching.